Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. It's early January 2014 and everybody is questioning what's going to happen to interest rates. We've had a long run of historically low rates, crazy rates, 30-year loans as low as 3.25%. But we're seeing loans being more expensive now. We see interest rates going up and everybody's wondering, are these rates going to skyrocket? Are we over the era of low interest rates? And I want to say no, and I'm going to tell you why. Primarily, the reason why interest rates have stayed low is because of the Federal Reserve, what they call quantitative easing. And what that meant is that the Fed was going to buy $85 billion every month of treasuries and mortgage-backed securities. And when you do that, then the yield is down, and so the rates are down. And that's the way it's been for a few years. But recently the Fed announced that they were going to start tapering the quantitative easing. And what they were going to do is reduce the purchases immediately from $85 billion a month to $75 billion a month. And that they would evaluate how much more they're going to do that and how long it's going to be before they're out of the market. Now, the market reacted very well to this. The interest rates kind of sold off a little bit, but then it was like the market expected it, and stocks started doing very, very well again. And rates did rise, although right now we're still not even close to really having 5% rates. So here's what I think is going to happen. First of all, what the Fed is going to do is they're going to do the tapering more up front on the treasuries than they are on the mortgage-backed securities. And that's really important to know because that's going to take us later in the year. The second thing is that, normally when interest rates go up is when the economy is really rebounding very, very fast. And when that happens, inflation is high. Well, one thing that we know is we still have unemployment levels too high. It's been a very, very slow recovery. And interest rates are virtually are based on long-term investing, which is very sensitive to inflation. But without inflation, that's not going to happen. And so that is not a risk at this point, and not a risk for quite a while. The second thing is that with this tapering, it does allow for the private sector, especially governments, institutional investors, and remember that they want to buy U.S. Treasuries even though the rates are low because these are the safest investments in the world. The dollar and U.S. Treasuries and mortgage-backed securities are still the standard of the world. And so it allows them to come in. And even if they don't come in to make up for every dollar that the Fed is not buying, it's still going to be high enough to keep the rates low. So what do we expect? If I had a crystal ball about interest rates on mortgages, what would I say? Well, I don't think there's any question that probably by about June of this year, that we're going to see rates, let's say around 5% on a 30-year loan. I think that would be a normal expectation. If all of a sudden the economy just did this huge rebound, of course, naturally it could go higher. But you know something? Of the era of remembering when rates were 14, 15, 16, 17% on a mortgage. I started in real estate. They were 10, 11%. 5% interest rates are incredibly low. And think about this. When you're buying a 30-year mortgage and 5 years from now rates are 7 or 8%, let's say, you're going to thank any realtor that told you to buy now because the rates will go up, inflation will go up because our economy is going to keep recovering, and that 5% locked in is going to be the best value for the dollar that you've ever done. So that's my prediction for 2014. I still think that through this year we're going to have low interest rates. Let's look to June to see a little bit of a rise. I think we're in for a good market in real estate, low rates, affordable housing, and a great economy in Oklahoma City. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.